Now, we move to matters budget. Remember that John Badi, CS National Treasury, is going to be making his maiden presentation of the budget 2025-2026 next week on Thursday, and we are going to be there for it. What is in there for you and I? Now, the digital asset tax will reduce by half whole of the digital service tax, while agent provisions are set to be repealed if the Bill 2025 is enacted in its current form. These are among the key highlights of by a tax expert, Felix Okach, who was on KBC English Service show to analyze the provisions of the Finance Bill 2025. I prepared this report. Here it goes.
Those earning from the digital space had raised concerns over the digital asset tax at the rate of 3% when it was first introduced under the Finance Act of 2023, terming it prohibitive for the growth of the nascent sector. And now the government has proposed in the Finance Bill 2025 to reduce the digital asset tax by half to 1.5%. Proponents have welcomed the proposal, noting that it would ease the tax burden on individuals and companies and nurture emerging technologies, as well as encourage tax compliance and attract investments into the digital and fintech space if enacted.
Crypto and the money, digital money. So those are changes coming in the marketplace. And it's important that the regulators be part and parcel of the change.
The Finance Bill 2025 also seeks to expand the scope of the significant economic presence tax by removing the previous exemptions for non-resident entities with an annual turnover of below 5 million shillings. This is likely to bring more digital service providers owned by foreigners into the tax bracket in Kenya. In addition, the Finance Bill 2025 proposes to amend the VAT Act to ensure that both digital and traditional broadcasting services are subject to the same VAT treatment. This means services offered by digital content providers will be taxed at the same rate like traditional radio and television broadcasts, promoting fairness and consistency in the taxation of broadcasting services. This will take effect on 1st of July 2025 if the Finance Bill 2025 is enacted by the end of this month.
So they come in saying that, let tell you that, let's say, for example, certain taxes.
Okay.
VAT is zero rating, some of them are zero rated. We're not going to start immediately. We start them over time. And that means there'll be more public participation again. And then this power is given to the minister and also the KRA to decide which taxes we have to be added progressively, not immediately, but
Okay.
but progressively.
Kenya Revenue Authority maintains it will operate within the confines of the Data Protection Act of 2019 when administering tax and in its tax collection services. Kenya Revenue Authority's assurance comes on the back of concerns that the tax agency is likely to abuse a provision in the Finance Bill 2025 requiring that businesses integrate their systems with KRA to unfairly access trade secrets and private or personal data held on behalf of customers or collected in the course of their business operations. The Kenya Revenue Authority says it will not flout the Constitution and other relevant policies and regulations. Regina Manyara reporting for Sunday Express.